There we go. Good afternoon, everyone. Ben Scribner with Angel Oak Mortgage Solutions. We're going to go ahead and get started in a couple minutes, but we want to give everybody a chance to get logged in and everything along that. But we hope everyone is having a great week and a great start to October. So give everyone a couple minutes. We have all coasts represented today. We have West Coast, East Coast. So this will be fun. Yeah, we'll give it everyone's getting logged in here, looks like. We'll give it about another 60 seconds or so, and then we'll get underway. We know everyone's time is valuable. And people are still trickling in a little bit, but we'll go ahead and get started. Some people are still trickling in and stuff. But we'll go ahead and get going. Again, my name is Ben Scribner. I'm a regional sales manager for Angel Oak Mortgage Solutions. On the call today, we have Eric Morgenson, one of our best and most seasoned account executives, and also Kim Gilder. We'll let these guys introduce themselves as well. But before we get started, please, this is interactive, guys. We definitely want questions and conversation. So please, in the chat box and in the question tab, please feel free to fire any scenarios or questions, things like that. I'll answer as many as we can live. If we don't get to your question, we'll definitely get that answer to you briefly after we wrap up today. But to introduce our guest today, Eric Morgenson, I'll let you start.
Hi, folks. Eric Morgenson. Been here with Angel Oak and doing non-agency loans for 10 years. 10. Wow.
Awesome. Kim?
Kim Gilder. I've been with Angel Oak for 4 years now, 35 years in the mortgage industry, have always played in the gray area of non-QM, even as a loan officer, because I hate saying no to anybody. So there you go.
Perfect. Before we get started, guys, we definitely want to start a poll real quick on how many people on the call have done a bank statement loan. It's always great to start that way. It does always kind of illustrate the point of market awareness and training and education, which I mean everyone on this call thinks is probably the most important part. So definitely go ahead and answer that poll. Let's see who's done some non-QM and some bank statement loans in the past. And we'll see how poll results. Okay. All right. So 53% of everyone on the call has said they have not done a bank statement loan, which so 47% have. So that's actually a great mix. That's actually perfect. I mean, half of you guys have some experience, good, bad, or indifferent. Some maybe with Angel Oak, some with perhaps other people, and then half of you basically have never and would like to find out.
Wait, not never, Ben. It said in the last 12 months, not never.
In the last 12 months. That's true. That's my apologies. But the programs are changing a lot, as I'm sure both of you guys would agree. So doing a bank statement loan 4 years ago is definitely going to be a little different than today. So, but we definitely want to go ahead and just jump in, into our bank statement program. We're going to cover bank statement, or just our standard bank statement program, but also our bank statement HELOCs. So we're going to cover both, but a big part of our resources and for everyone just to jot this down is angeloakms.com. This is our main page. This is where you can find just about everything. You can find a local account executive, our quick quote, our programs, our resources. We have a ton of information on this website. So please, if you remember one thing other than Eric and Kim's wonderful smiles, is angeloakms.com. So yeah, this is a great spot. But we'll go ahead and just jump into bank statements. And Eric's going to take the first part under bank statement. So Eric, do you want to go ahead and just give the brief, I'll start on with it. Yeah, just a brief overview on the program and who it fits and who's it for and everything like that.
Hey folks, we're here today, and thank you for taking your time and watching this webinar. We're here today to make you money. And what we do is we save loans. We love scenarios. If you have a borrower that you haven't fully baked to 1003, they're self-employed, they don't show a lot of income on their taxes, why would they? And you haven't run credit yet, give us a call and let's walk through the scenario before you spend the expensive money running credit. So we're here to make you money. And boy, there is such an underserved market out there in the self-employed borrower. It is truly still very underserved. And they don't know about these programs. So we need your help getting the word out that these programs exist. At Angel Oak, on a bank statement loan, we'll allow a rent-free borrower who is maybe living in mom and dad's basement, but crushing it in a self-employment business. And we will do bank statement loans for somebody that doesn't show any housing history right now. So we've completely expanded our guidelines over the last few years, and a lot of you folks probably don't know it. Bank statement loans, they're not hard. All you do is you gather 12 or 24 months bank statements. Anybody can log on to their bank and pull down 12 or 24 months. Now, often a 24-month scenario is a 2-year look back is a lower rate because it's less risk. And these programs are all risk-based pricing. So at an 80% LTV and above, you want to actually get 24 months versus 12 because you're going to get about an 1/8 lift in rate. Here's the beauty about bank statement loans. They're normally all big loan amounts. There's not a lot of W-2 wage earners out there buying a $1 million, $2, $3, $4 million house. Normally, they're self-employed. So on these bank statement loans, you guys, we'll even do a loan under a bank statement scenario 1 day out of a Chapter 13 if they filed for Chapter 13 at least 24 months ago. Folks, we have niches inside of these niches. And as you can see, we go to 90% LTV, never, ever any MI on these loans either. Ben?
Yeah, exactly to your point, Eric. I mean, I think we do, obviously, anyone on this webinar who goes to conferences have probably seen us out there. We attend almost everything. And a lot of our presentations, we actually have a big slide. And it's the amount of business applications that have been started, even through COVID. I think it was up 36% from 19 through 2020. And you can imagine what we were all doing there. So, I always talk about the next generation of home buyers being self-employed gig economy workers. Who's the next generation is millennials. What are they? They're not traditional 40-hour work week people. You have a lot of entrepreneurship in the country, and it's just been exploding. And now these borrowers,
you can't walk out your front door without tripping over somebody that's self-employed. We'll even do a bank statement loan for somebody who's self-employed for only 1 year, not a 2-year runway like the rest of the industry. 1 year self-employment. Now, the caveat is we put on common sense goggles when we underwrite these files, and they're all hand underwritten. There's no DU or LP backstopping these. So if somebody is 1 year self-employed, we want to see that they at least have a history in the business or the vocation that they are self-employed in. So it just makes sense.
Absolutely. The 1 year self-employed is actually a big part because obviously 2 years is always a great idea. You want to see a business that's on solid footing. But if you're looking at a 12-month bank statement, well, most people when they start a business, that first year isn't going to generate much revenue. It's they're getting going. So being able to look at that 13 through 24 months instead of the entire time that they've been open is obviously for an income picture, it's huge. And Eric, I know a lot of times when you talk about when you do presentations, you talk about how easy it is to get bank statement income ran. Did you want to touch on that real quick, and then we'll keep flying?
I didn't quite hear what you said, Ben.
Oh, just the ease of getting bank statement income ran. just that
Here's
process.
the process, you guys. Simply fully baked a 1003, pull credit. We'll even take a soft pull so you don't trigger lead your client and spend what, $90 on a tri-merge and 12 or 24 months bank statements. That's it. Then you send it into our pre-qualification system. We're going to give you a full credit and income underwrite, often same day, on a bank statement loan. Therefore, you can go back to your borrower if it's a purchase. Now your client knows exactly how much purchasing power they have. It's that simple, you guys. We pre-flight everything because it saves a ton of time. And oh, by the way, all exceptions are done at this pre-qual level. So you don't, literally, the loan doesn't blow up after we've already disclosed, goes into underwriting. We need an exception. Oh, can't get it. And now nobody has time for that. We actually take care of everything right here at this pre-qual level. It's efficient. We've been at it for over 10 years.
Absolutely. Speaking of 1003, Tim, you know, a lot of people, you know, it's always important to cover what do we want on a 1003 and what do we not want on a 1003. Those are always interesting questions.
So on the 1003 for a bank statement program, it's actually pretty much the same thing. This is going to be the DNA of us making a decision on the loan. So it's really important that we have a fully executed 1003, meaning 2 years history for residents, 2-year history for their employment, their assets, making sure that if they own other properties, that the mortgages are put together. But what's great about the bank statement program, we don't want you to put income on there. So even if you've gotten the tax return and the tax return doesn't work, we don't want to see that income. So fully executed 1003 with no income on it. And just to highlight a little bit about what Eric was saying, you know, where do I get these borrowers? And it usually starts when you're doing the 1003. They haven't filed their taxes yet for 2023, self-employed. We don't care. You know, they don't, if they filed their tax returns and they owe money, we don't care because we're never going to see that any tax returns on this program. So, you know, again, when you're marching down that path and you're getting the tax returns and you're getting a hard stop, you really need to call Angel Oak because we're going to show you how to get those loans approved. And like I said before in my introduction, I don't like to say no because the first time that I tell somebody no on something, they're going next door until somebody gives them a yes. So you're missing opportunity by not giving them the option to apply. That's it.
Yeah, no, that was perfect. Yeah, as Eric mentioned, you know, non-QM is so scenario driven, so the accuracy in a 1003 is really, like, especially if you need exceptions and things like that. That, you know, the accuracy of the 1003 is important. So, you know, we do want that complete 1003. I always say just because it's non-QM doesn't mean that 1003 can be blank. Just that income blank, but everything else we really need to, we really need a complete picture. But you know, you'd have to do that anyway. You'd have to have a complete 1003 regardless. So shouldn't be too challenging. Got a couple questions coming in. Ed, can you do bank statement or P&L on ITIN? I'll take that one real quick. Right now, our ITIN is only full doc. We do expect that to actually expand, you know, hopefully soon. I would bank early 2025. ITIN is a different sort of animal of a product. So right now it is only a full doc for us. But Abe actually, and here's another question, and Eric, does it work on business bank statements? Eric, do you want to cover that real quick? He's saying, does this program work for business?
ITIN, ITIN that is not Angel Oak's lane. We offer it, but that's not our lane. Bank statement, DSCR, and aggressive alt income seconds because we're in the middle of a raving cash out market, and will be for the next 2 to 6 years, maybe 7, and nobody's paying attention that this is a cash out market. So with that said, as far as business and personal bank statements, we'll take either. There's no lift in rate if it's a business bank statement or a personal bank statement. The caveat to this is on second mortgage bank statement loans cash out, it's only business bank statements. It is not for the sole proprietor like our first mortgage bank statement loans.
Perfect. And Michael asks, and Kim, if you want to take this, if the client does not have rental history, can you still do a bank statement program?
Michael, yes, we can. Again, I like that word, yes. So we do allow a first-time home buyer with no rental history to do a bank statement program. We require a larger down payment to do that and a minimum FICO score of 720. I've actually started to see a lot more of this, and it's really nice to be able to say yes. And as Eric said before, this is one of our niches that nobody thinks about that, you know, we can do here at Angel Oak.
We're actually getting some great questions in here, guys. I got to scroll up, actually. Hang on a second. Okay. Eric, hey, how do we get signed up with Angel Oak? I have loans ready to go. Fantastic. I'll definitely get in touch with you right after this call. I'll put you in contact with whoever your designated point of contact is. But you know, getting signed on one of those is very easy. It's free.
Ben, would you show them the coverage? Go into find account executive and just show everybody the coverage of Angel Oak.
Absolutely. Again, right off angeloakms.com, our one and true website. So if you guys ever come, you're looking to find out who your account executive is, you can always enter on the right-hand side. You can request contact, and we'll get you in touch with somebody immediately. But see if we want to see Eric's shiny face here. You could always come to the map in your local area, and you can see who your designated people are. Here's Kim in Virginia, and of course my smiley face a few pounds ago. Our website is perfect for that. Eric, I'll definitely get in touch. I'll definitely find out who your designated point is, because some states we do have multiple account executives, so we want to get you in touch with the right person for sure. So we'll definitely make sure of that. Nick Nelson asks, what's the expense ratio used on your bank statement loans? And Kim, do you want to take that one?
Sure. So our standard expense factor, and if you notice, I'm using like a standard because, as Eric said, more than 30% of the loans that we do have some kind of an exception on it. So if we do a bank statement and they've got $200,000 a year in gross income, the standard is a 50% expense factor, giving them $100,000. If that income qualifies, we're good to go. Like, there's no questions asked. As there's situations where we go down to 15%. For example, one of your best customers, and I'm talking for the bank statement and 1099, are realtors. So your realtor partners actually use this program for their own purchases, whether it's their residence or they're purchasing another investment property or a second home. On 1099s, we can go down as low as a 15% expense factor. So again, each loan is unique. If you're a single man person sitting behind a desk, you're not paying rent, you work from home, a 50% expense factor is pretty high. But again, if it comes through and the income works like that, we're ready to move along with little, no other information needed.
Awesome. Abe, you said when you say second mortgage, do you mean HELOC? Absolutely, and we're going to cover that here in a little bit. We're going to cover our second lien positions, our closed-end seconds, and our bank statement HELOCs. So hang tight for that. A lot of questions kind of coming in, guys, and we'll keep this moving. I'm sorry, I'm not going to be able to get to all of them. Can you repeat the third? Oh, Eric, Jeff asks, can you repeat your third niche besides bank statements and DSCR? I think you mentioned some are full doc options or something.
Well, we don't have three niches. We have literally dozens. Here's a niche on a full doc loan. We only go off the primary wage earner's FICO score. We'll use the co-borrower's income, but just going off the primary wage earner's credit score, that in itself saves loans and lowers rates out there, you guys. So why don't you, whoever asked that question, feel free to contact me after this webinar, and I'll take you through some of these unbelievable nuggets of how to save loans out there.
Awesome. And Carol-Dean, average close time of a bank statement purchase. So I would so turn times are always a question. I'll actually answer this one, guys. We can close a loan as fast as you can. That's, there are obviously things that are outside of all our control, like appraisal time and title. There's things like that are outside of all of our control. But as Eric mentioned before, we're a manual underwrite, but it's we're going to get you conditional approval as fast as you can get us those conditions. We can get them reviewed and cleared off. We can get them done. I think it was 60 or 65% of our loans close in under 18 days. We do also do a lot of new construction, so we kind of have to, remove some of those because some of those are, 90, 120-day closings, things like that. But, I always say that it's really as fast as you can go is what our general turn times are. I mean, we're closing loans in 30 days. Absolutely. The majority of our loans close in under 30 days. Julie, unfortunately, we do not
budgeted for this.
I'm sorry.
What we have a half an hour or an hour budgeted for this?
Oh, hour. Yeah, we have an hour, but we won't try to go a full hour. Julie, and again, I'll just answer a couple of these. Julie, yeah, unfortunately, we do not offer a 6-month bank statement loan. We do require at least 12 or 24. So, but we do want to keep moving, guys. All the rest of the questions, I'm definitely going to we're going to get you answers. Absolutely. I appreciate everyone throwing those in there. Those actually make these webinars a lot more, enjoyable, because obviously Eric and Kim and myself, we love scenarios. We love that stuff. So the more questions and things you throw at us, the better. Makes this a lot more, a lot more fun for everybody. We're going to touch real quick on, and again, I'm sorry, we did just take up some time. But Eric, if you want to touch real quick on 1099, just briefly, because then we'll get moving on to the banks and HELOCs and our appraisal waivers and some other good stuff.
Okay, so the terminology is alternative income when it comes to these 1099, profit and loss statements, or bank statements. Normally, the easiest path is to go bank statements. It's really simple. You simply get 12 or 24 months bank statements. However, what if we get 12 months bank statements or 24 and we see the income is completely going off the cliff, over 35% declining income? Well, with that, we can pivot over to a P&L or a 1099 if they're a 1099 borrower, being a sole proprietor. As far as, let's say we get bank statements, and sure enough, they have 10 NSFs every month over the last 10 months. And they're bouncing checks like crazy. And their bank account is negative balance every month. Right there, we have the ability to pivot to a P&L. You guys, we have ways of making loans fit because we do all this in the pre-qual process. And by the way, once your pre-qual is approved and that goes in front of an underwriter, it's almost a stamp because we've done all income and credit underwrite right up front in this process. Now, for those out there that have never done a bank statement loan, that's okay. Just text, email, or call an Angel Oak account executive, and we will walk you through this entire process, letting you know the forks in the road and the reason why we need to structure the loan this way. As you sent us a pre-qual, we can't fund the loan that way, but we have ways where we can fund it. We walk you through this entire process. Honestly, it's really not that difficult, but if you've never done one, you don't know what you don't know. Let us show you how to make bank on this underserved market out there that is self-employed people. I'm telling you guys, it is such a wonderful opportunity, and not a lot of people are paying attention, especially the cash out market that we're in.
Absolutely, and as soon as we get done covering HELOC, We're going to show you just how easy it is to get all those docs securely to your dedicated point of contact. We're going to show you just how easy that is. It'll take you less than 3 minutes most of the time after you do it one time. But Kim, let's go ahead and jump into some second liens. It's exciting. The second lien products are absolutely popular. They're kind of coming on. They're relatively new. I mean, obviously second liens aren't a new thing, but bank statement HELOCs really are kind of a new product. Eric, you may correct me if I'm wrong, but I'm pretty sure we were the first with a true bank statement HELOC to the market. If we weren't first, we were real close to being first. There aren't too many people out there that actually offer it. But Kim, if you want to take us through the bank statement HELOC real quick, and then we'll obviously touch on appraisal waiver and all of that.
So again, we were really excited to be able to have this option brought to the market because again, with people sitting in those low 3% first mortgage rates, they don't want to refinance to cash out. And with everything that's going on, we see people who want to renovate their homes because they're going to stay in it longer, or they've got debts that they want to accumulate, but they don't want to refinance out of that first mortgage. We have options up to $750,000 to cash out on a second lien. We do owner occupied, second home, and investment properties. The investment property piece is amazing. We do up to an 80% CLTV on an investment property on a HELOC. And it's like, yeah, as Eric said, can you imagine? We see people pulling out equity to buy other properties with this. So there's a lot of different ways that borrowers can take advantage of the equity that they've built in their home to accumulate more wealth by investing in other properties, paying off their debts, improving their lifestyle. So this is really an amazing option. So we can do this full doc as well, but we're focusing today on the self-employed people. There's no restriction on how the funds can be used, which is also really great. For owner occupied, we can go up to an 85 CLTV. We have first mortgage options as well, and we have different loan terms so that we can set it up based on your borrower's situation and how they best see how they want to use that money. Did I miss anything, Eric? Because I know that you're a huge fan of this as well.
Oh my gosh, you guys. We have brokers that are crushing it right now simply because they understand we're in a raging cash out market. Never, ever underestimate the desire of a self-employed or an entrepreneur to get their hands on capital. Why? They can take $200,000 and double it through their business acumen, but they don't know that they can get to this dead equity in their property. You see, they think, gosh, nobody wants to touch that first mortgage interest rate that's in place right now. It's a historic low. We have a historic high amount of residential equity. We also have a record high amount of SBA loans, small business administration loans, credit card debt, car loans. When a business person takes money out of their primary or investment property and takes that money and puts it towards paying off business debt or puts it towards their business, it's 100% tax deductible. Unlike their first mortgage interest rate is only deductible to whatever tax bracket they're in. So the fact that our bank statement seconds are a lower rate than an SBA or a small business administration loan with about 1/7 the amount of paperwork to do. There is so much opportunity right now, folks. Not to mention, an SBA loan is still going to put a lien on your house. So help us get the word out that these programs even exist.
Absolutely, and the process of it is the exact same as our bank statement program. We're still going to run that income for you up front. It's still the exact same process. And, again, no 4506. They don't care about, how if and when they file their taxes, things like that. So it follows our bank statement program, but, allowing that draw and,
if I may, you guys, how do you make money on a second? You're probably thinking there's small loan amounts. I can walk into a credit union and get a free second. Oh, by the way, my credit union will even pay for my appraisal. So how are you folks out there going to make any money doing second mortgages? Aha, credit unions, B of A, Wells Fargo, Chase Bank, they don't do alt income second mortgages, cash out. You do. You have access to this. And who wants their hands on capital more than anybody? Somebody that's self-employed. Therein lies the opportunity. You can charge anywhere from 0 to 3 points origination. We go to $750,000 on these seconds, either a HELOC or closed end. And most of my broker business is charging 2 points on these. You guys, there's a lot of cheddar in this, and boy, aren't your borrowers delighted. And by the way, who do self-employed people hang out with? Self-employed people. Watch. You start doing a few of these and watch the kind of money you can make. It's wonderful.
So I did miss one part, and this is an important piece. Eric brought up the appraisal. We have an upfront appraisal waiver process with our HELOCs. As soon as the pre-qualification comes in, it's automatically run for an appraisal waiver. I did a pre-qualification on an investment property yesterday at an ADLTV, CLTV, and guess what? We don't need an appraisal. I got an appraisal waiver on it. That is huge.
When your income is done up front, your free credit check and your valuation is already done. I mean, where's the difficult? There's always that misconception that, non-QM is difficult. I don't know how that becomes difficult. And I think that removes the three biggest possible things possible, right? It's remarkable to me.
Well, what I would do is I want to find a place that does the most small business administration loans and literally get in touch with them, and the people that they're turning down offer a cash out alt income bank statement second to that borrower that SBA said no to. Just saying.
Absolutely. We're getting a whole host of questions in here too. I'll try to. Do you have a limit amount of cash out on investment properties from Baxter? Do you have a limit of the amount of cash out? And Baxter, I apologize. I'm not sure if this was on our HELOC or our standard. That's absolutely up to exception. So our guideline is 500,000 cash in hand. We go above that all day long. Eric could probably tell you. I think Eric's done $1 million cash in hand probably I don't know how many times. So that's kind of the beauty of Angel Oak is our integrated model, our vertical integration. So if we like a scenario, we can do it. So that's why Eric actually started with, we want to see your scenarios, because that's, guidelines are guidelines, and we can absolutely blow through those, in certain circumstances. And then there's some circumstances we can't, just like our minimum requirement of ownership of a business. So we require someone to be 25% owner to do a personal bank statement loan and 50% owner to do a business bank statement loan. That's not something we can really blur the lines on. But as far as the rest of it, a lot of it, especially late collections, things like that, we have a lot of leeway. So, Baxter said, yay. that was his question. So perfect, Baxter. Okay. Ed Zamora, loved your comment. Eric, I know you can't. Sorry, guys, I'm kind of reading these out loud because Kim and Eric can't actually see the questions. Only I can. Thanks for repeating that part. So true. It's amazing. I will call all my local banks to deal with SBA clients and small businesses too. So perfect. That's what we love to hear. A lot of part of what we do as Angel Oak account executives is, we do a lot of fallout, guys. We absolutely do fallout. We don't mind it, but teaching loan officers where to go find this business and teaching you guys to go get this business is really the partnership that we really kind of hanker for. That's really the gist. Again, we do this appraisal waiver up front for you. It's behind the scenes. So we'll show you, it's a great segue to go right into Quick Quote and our Quick Qual system. But as soon as that comes to us, we're going to have that income ran for you. We're going to be able to confirm if the appraisal waiver works, and then you're off to the races. Kim, Eric, did you guys have anything else to talk about on
Yes.
HELOC or?
Yes, all you people that have done a bank statement loan, that borrower, guess what? Why don't you offer them access to the debt equity that they have in their property? Just saying, that is such low hanging fruit. The lowest hanging fruit in all of the mortgage industry today, October 2024, is any past bank statement loan you've ever done, offer them access to the equity in their property. Watch what happens.
Absolutely. And Ed, you're throwing some great questions out there, my friend. We do have flyers. I'm actually going to get into our marketing portal as soon as we get done with our quick quote. So, Kim, did you have anything that you wanted to go there next, or you good? Okay. Sorry, I don't want to cut you off there. So again, guys, we talked about how great our website is, and this is the jumping off point. Of course, all of our former webinars can be found under our blog and our webinar section. So if you ever want to see any other topics and things like that, we do have another topic coming up at the end of this month. I believe that's for DSCR loans, so please don't miss that. But in order to send us, send us a pre-qual, and guys, this is huge, to price out any scenario. You come right to our website. You don't need credentials to do this, so you don't need any. You don't need to log in to do any of this. It's actually mobile friendly as well. Just come right to our non-QM quick quote, and you just punch in this little bit of information, and we can run a scenario. Eric, do you want to throw me a scenario there, buddy?
Sure. Let's do a second lien. See how it defaults to a first lien? We're going to change that to a second. Then we're going to put in a second lien amount. Let's put in 400,000. Then we're going to put HELOC draw the same, 400,000. Then we're going to put credit score, let's say 740. CLTV, let's say 75. The state.
Your wonderful state of California.
Yep, we'll say California. Doesn't matter to rate what state it's in, folks, but it does on a DSCR loan. We allow you guys to do loans in states that you're not NMLS licensed in. That's why we're asking for state. So cash out, full doc. No, let's go 24 months business bank statements. Again, seconds are only business bank statements, not personal. Let's say it's owner occupied, U.S. citizen. Lock 30-day. We're not waiving escrows, not doing interest only. By the way, all HELOCs are interest only. Borrower paid comp. So now here we have a 10.5 or closed in second at a 10.75. Let's go to the 10.5 and check out the HELOC real quick. You see, there is no yield spread premium. No premium pricing that says borrower paid comp and par is at 10.5. Now, your borrower is able to buy down the margin for the life of this second. So let's say they want to buy it down to, 10%. That would, on a $400,000 loan, they would be spending $5,500 to buy down the margin. Now, we don't see a lot of people doing that right now, simply because we're in a decreasing interest rate environment. We all heard the feds are looking to lower interest rates an entire point in 2015. So not a lot of people are using this option. If it was going the other way, we'd probably see that. But let's just go ahead and select the par rate. Go ahead and click that little circle. Now we're going to select option. Now, if you know how to pull a MISMO 3.4 file out of your loan origination software, do it. Just drop it right in the box. If you're not familiar on how to do that, no big deal, just hit next. Now you're going to come to step 3 of 3. Then scroll up and let's see the general guidelines. So this is the program we're looking at. Can always change this later. We're not disclosing at this point. At this point, we're simply structuring the loan. So with that said, you're going to put in who your account executive first is. You're going to put your contact information. You're going to put the borrower's information. And why do we want the street address? We're pulling in AVM so we can possibly waive the inconvenience and the cost of running an appraisal for you and your borrower. So with that said, put in the address. Make sure that address is correct, because we're spending the money on an AVM and don't want to do it on a wrong address. So next, you just simply drop in your 1003 as a PDF. You drop in the credit report. Again, we'll take a soft pull, save the money. And then we don't need a 1008. Why? We have no idea what the debt to income ratio is yet, because we have yet to determine what the monthly income is for your borrower. So that's why there's no little red asterisk there. Then just drop in all the bank statements, just bip, 12, 24. And we want the last 12, the last 24, not calendar year. So with that said, now we're going to click on the business bank statement questionnaire. This you fill out for your borrower. We do not need a CPA, don't need your borrower filling it out. They can, but at the pre-qual stage, we just want to know the name of the company. We want to know the ownership percentage. Why? Let's just say me and Ben are in business together and we have $100,000 a month on average being deposited into our company. Well, I own 50%. So Angel Oak is going to start with 50% of the deposits. Not complicated. So we really need to know the ownership percentage, and the less snooping around you make an underwriter do on a borrower, kind of the better. So put in, if they have a website, put the website in and just give us a brief explanation of what business that they're in. Oh, by the way, as Kim mentioned before, the #1 vocation out of all bank statement loans ever done in America to date is that of real estate agents. And I believe that that's the case because they're the first ones exposed to bank statement loans out of any vocation out there in America. But again, America does not know that these bank statement loans exist. There's where we need you. So you would just simply put in, it's a business bank account, and you'd put in, we want to know how many locations and approximately how many employees, so we can get our hands around what kind of expense ratio. Now we give everybody a default 50%, meaning we give them 50% profit margin. Oh, that's quite generous. If you need more, then we get a CPA statement, and we have examples of these letters even from H&R Block on my borrower's been self-employed for 3 years. Their expenses run approximately 20%. Great. With that, we're going to use 80% of what your borrower deposits into their business checking account, be it they own 100% of the business. Not complicated. You'll see form completed by, leave it blank. Save it as a PDF. Ben, let's go back to the pre-qual. Drop it right into that bank statement questionnaire. Additional documentation. Let's say you're doing a bank statement loan, or a lot of loans that fall out come to us at the 11th hour. Guess what? There's already an appraisal. Well, we'll take transferred appraisals. Love that. If you have an appraisal, drop it right in there. So we're giving you a full income, credit, and collateral underwrite right up front, often same day. So scroll down. We want to know if the borrower's had a bankruptcy. Not a big deal if they have. We just want to know about it. And if they've had a housing event, means a foreclosure, deed in lieu, that kind of thing. If they haven't, great, not applicable. But if they have, that's okay. We can still do the loan. There might be a loan level hit adjustment because of that little blemish on their credit, like a foreclosure. Oops. So next, any comment, you can just say, hi, Angel Oak, doesn't matter. But if there's something wonky about it, you want to give us a heads up. Put it right there in additional comments and then hit submit. What's going to happen is we're going to get this pre-qual, and now we go to work. We're either going to approve it, we're going to counter going, here's how you submitted it, but it doesn't qualify there, but it does qualify over here, or we're going to decline it and give you a thorough explanation on why we can't do it. And traditionally, it's because it's not ATR compliant. Our paranoia is any borrower can sue Angel Oak for their inability to repay this loan. They have a 3-year statute of limitation. If we do a loan on an owner-occupied property and that borrower can prove that they don't have the ability to repay it, automatic lien forgiveness in the state of Colorado, Oklahoma, and Minnesota. In a state like California, they would take us to court. But can you imagine somebody on the jury, we're at court, and somebody on the jury had their house foreclosed upon at some time, and now we don't want to be in that position. So we just want to make sure that they do have the chops to repay the loan, not complicated. So That is simply the process. We vet out all these right up front before we even disclose, you guys. It saves a ton of time. We've been at this for 10 years.
Absolutely. And to give you guys an idea of what normal, like that was pricing on the HELOC. I always like to give a little bit of an idea of what, of what pricing looks like on a regular bank statement loan. An 80 LTV purchase on a bank statement, 6 3/8. I mean, that's, our pricing is extremely aggressive. Non-QM pricing in general has gotten really dialed in across the board. So, a lot of people think, well, okay.
Ben, let's view rates. Hit the view rate tab.
There we go.
So now you see yield spread premium in these loans right now. Seconds doesn't have it. These do. So you see that this one does not fall on a par rate. Honestly, the closest to par is 6 3/8. But that gives the borrower $1,000 lender credit. What we have our brokers often doing is they charge 2 points for these loans. However, if they bump the rate, let's say just a notion, now we can offer their client a point in lender credit. So in actuality, they're only charging their borrower a point. Say, I'm charging you a point, Ben, on this, but I got the lender to actually pony up a point. So I'm not actually charging you 2, you're only paying me 1 point because I got another point in lender credit. So with that said, when it's borrower paid comp, there's never any clawback here at Angel Oak. Even if the loan pays off inside of, 4 months, we're not going to claw back your broker check when it's borrower paid comp. Now, if you go with lender paid comp, if that's us paying you upfront for this loan, then it's a 6-month carry without a clawback. But borrower paid comp, never.
Yeah, extremely strong, that's for sure. I mean, a lot of people, I always say like, oh, well, your rates are, sometimes, they'd be a point above conventional rates. Well, not anymore, but, our rates fluctuate, same as conventional rates. It's like, well, yeah, but we might be a point above conventional rates, but we're saving your borrower 25% in tax. So what would you rather? What would you rather, go amend your tax returns or write a check to Uncle Sam? I don't think so. Ask any CPA what they would recommend, and clearly this would be the smart way to go. We're running a little low on time, so definitely want to get into our marketing portal. Of course, it logged me out already. Kim, if you want to take us through our and this is actually I don't want to say a test site. This is exactly mirrors our normal site, but it's a little different. So for everyone who has credentials, this might look a little different than what you normally see, but they don't want us playing around in our live portal with sample loans and stuff. Hang on one second.
While he's doing that, I want to say this is probably one of my most favorite parts of this, because a lot of times when you're used to playing in the box, like, where do I find these borrowers? Where do I get these referrals? We've already talked about the realtors being one of your #1 customers in this product. We talked about going to the banks to get SBA referrals. You've got CPAs. They're doing tax returns and they're trying to get, figure out if they can buy a house. CPAs are a great referral source, because who does the self-employed person call when they're having a problem? They call their CPAs. Financial advisors, they're a great referral source for this, because especially like on the second loans, if you've got somebody pulling money out of your investments to do something, but they have equity in their home, the financial advisors don't want them to pull money out. There's another way to do this. They're a great way to get referrals. Going to your pizza and deli, they're all self-employed. Getting your nails done, your hairdresser. Anywhere you go, you're walking into self-employed people. And as Eric said, once you start getting in that bucket, it's just like, it becomes like an endless referral cycle, because you do a self-employed borrower who's been turned down by everybody, and you do that loan. If you don't think that person shouting to the rooftop to everybody, you're missing the boat. So I'll go into our marketing portal now, specifically our marketing flyers. We have flyers for everything. We have flyers for bank statements. We have flyers for the bank statement home equity. We have realtor specific flyers that you can go in, because when you go to visit your realtor partners to get referrals, every loan officer walking in is talking about service and rates in the box. We're outside the box. How great is it to be able to go in and talk about bank statement programs, 1099s, DSCRs, asset qualifier? You're going to have a whole other totally different list of things to talk about with your realtors. And again, if they've had a loan that went sideways recently that you could have saved by one of these programs, who is your realtor's new best friend? Are you having problems with that loading up?
I am. I apologize. We actually had a flyer loaded for a loan officer for, I'm sure everyone just saw, for guaranteed rate. And I feel kind of bad because we don't want to put anyone's personal information out there on a webinar. So I apologize. It's been a little slow. So while this takes a second, because I think I just confused the daylights out of it. Couple quick questions.
Real quick. Hey, are you producers? Are these flyers going to make you money? Seriously, let's get down to it. Is a flyer going to make you any money? Yes, it is. It depends on where you put it. Does anybody go to a car wash? Just keep some Scotch tape in your car and tape these flyers on the wall of a car wash while people are waiting on their car to get clean. Or better yet, take these flyers, tape it onto the refrigerator of real estate offices and watch. Just keep some Scotch tape in your car, a stack of these flyers as you're driving around, put it up. You guys, getting the word out is how the magic starts. These flyers will make you money.
So in regards to flyers, since we can't necessarily see it yet, there is nothing on here that shows Angel Oak. If you notice where it says photos, it's your photos. The logos that you're uploading are your company logo. There's nothing on here marketing Angel Oak at all. So this is free marketing material for you. You don't have to pay a penny for this, which is great. Since he's still loading, I'm going to jump around a little bit more. We have social media posts that you can put on Instagram, Facebook, and LinkedIn. We have presentations that you can do. So if you wanted to go into a real estate office and talk about these alternative programs, we actually have realtor presentations already set up for you to do. I mean, you just load it up and the presentation is right there for you to use. It's great stuff.
And it's all delabeled. So this is part of our partnership that we want to be, and we'll do these realtor presentations with you if you want. And again, we'll be there on your behalf. If we could just be a local expert on alternative lending, or however really you guys want to present this to your realtor partners, we will absolutely do for you. So I apologize. I'm sure everyone saw the flyer initially, and I think I broke this thing. It's still downloading, but absolutely. A couple questions came in real quick. Patrick, do we get paid on the HELOC lien or the first draw? You actually get paid on the whole thing. Whatever the loan amount is, you don't get paid because we require 80% draw, but you get paid on 100% of the loan. So just so you knew that. Abe, can you do a HELOC if the house is paid off? Absolutely, we can do first lien HELOCs. That's not a problem. What is the max number of units you'll do on DSCR loans for Carlton? So definitely, I mean, we'll answer that obviously, but you definitely want to attend our DSCR webinar here. I think it's on the 27th, but we technically have a limit, a maximum exposure of 5 properties or 3 million. We go above that all day. I know Eric's done 10 packs. I've done 10 packs. So absolutely, it really depends on the quality of the borrower, especially on DSR loan, the credit, how strong the borrower is credit-wise, and the collateral. LTV obviously is a big part too, but if these are solid, solid pieces of collateral, then that's a whole lot better than, you know, $1,200 and $10,000, you know, kind of rough and tumble kind of stuff. So, you know, always just keep that in mind. Jeff, repeat, you said that I can lend in any state, even though I'm currently licensed in one. We actually have a list of 11 states, Jeff, that you can operate in. We do require you to be NMLS licensed in one state at least, but we have a list of 11. It's actually on our website as well. If this is loaded yet, it has not. Sorry, guys. Hopefully everyone saw the flyer the first time. But as you can see, we have flyers for CPAs, delayed financing, bank statement HELOCs, realtors, you know, 2-to-1 buy downs, 1-year self-employment ITIN, our full docs, short-term rental. We have everything in Spanish. So, sorry that this is not really pulling up. That's a little technical error. But hopefully everyone got to see what it kind of generally looks like. And to add one person, you know, how do you get access to these? All we gotta do is get you credentials to our system. If you're not set up with us, we would need to get you signed on. But if you're currently set up with us, we can just get credentials for you in less than a day. So you definitely want to do that through whoever your dedicated point of contact is. If you don't know who that is, feel free to shoot, you know, me a message, Eric a message, Kim a message, any of us really. Yeah, none of this is loading. Okay. All right. So it looks like this is out. But again, this is just our test site. This doesn't actually happen on our live TPO portal. We use Encompass. So this is sort of a mirror. So my apologies for that part. But see here, we're wrapping up right on time. With a HELOC on a first, can you still do business bank statement for me? Yep, absolutely. First, I'm assuming you mean first lien. And Ed, yes, absolutely. Just so everyone knows, everyone on the call, anyone who's attended or anyone who's registered will get a recording of this webinar also, and it'll also be located on our in our webinar section under our blogs. So everyone will get a copy of this. But again, if you guys have any questions, concerns, please feel free to reach out to us. I know we kind of jumped quickly through the end of this, but Eric, any last thoughts before we get signed off?
Folks, much reason to be optimistic going into Christmas. You guys want to have a really good Christmas. Get the word out that you have access to cash out second mortgages for people who don't show a lot of income on their taxes, you guys. It's more than a niche, it's an entire industry. We are in this cash out market. Go get it before anybody realizes.
Awesome. Kim?
And again, I always like to close with, before you say no, call Angel Oak and let us help you say yes. It doesn't matter what the scenario is, the loan type. We're really the experts at looking at these deals that don't fit the box and helping you get to a yes.
Absolutely. Well, thank you guys. Eric, Kim, thank you for your time today. Appreciate you guys willing to do this with me. Thank you everyone who joined us. Hopefully you got some information out of it. Hopefully it was time well spent. I'm sure it was. So anything you need, please don't hesitate to call, text, email any of us day or night. We are here to partner with you. So anything we can do, we will. But stay tuned. Our next webinar, I believe, is October 27th for DSCR loans. I think I'm doing that one. I'm not sure. Or it could be our fearless leader, John Gemina, back in the saddle, hosting it. But hope to see everyone on the next one. Thanks, everybody.
Thank you, Ben. Thank you, everybody, for your time.
Absolutely. Take care.